All right, welcome back, everyone. Thank you, everyone, for joining us in today's video. I'm here with Jim Black of Revest Homes. Welcome, Jim.
Thanks again for having me on, Jason. Appreciate it.
Absolutely. So today's video, as you guys can see from the title, is all about what does it look like to refinance your loan if you have a VA loan. So we made several videos regarding this. We made videos regarding if you have an FHA loan and conventional as well, and also some advice about how refinances work. But in today's video, if you are a homeowner and you have a VA loan, what does it look like in order to do a refinance? So I'll let you take this away, Jim. Thank you.
Sure, absolutely. So first and foremost, VA loans are one of my favorite loans to be involved with because it's supporting families in the military that protect our freedoms. So thank you to all the past veterans and current family members and military members out there. It means a lot to help you guys. And, a lot of times people are across state lines or in another country. So it's a real big honor to be part of that journey. So thank you again for your trust. One of the cool things about veteran loans, VA loans specifically, they offer a lot more flexibility in being able to refinance. VA loans have a program called an IRRRL, IRRRL, which stands for Interest Rate Reduction Loan. The IRRRL allows you to have more flexibility in being able to qualify for a lot less documentation, no need for an appraisal, and reduced fees, which is really nice. So that's a really good benefit for VA loans. The biggest thing about when you go to refinance any loan, obviously, is to make sure it makes sense for you as a homeowner, and also that there's a net tangible benefit involved. The VA loan program has limitations on when you can refinance in terms of timeframes and what the benefit has to be or exceed to be able to refinance.
Right. So in other words, have these guidelines in place to make sure that people are actually refinancing and gain some sort of benefit from it rather than just refinancing to just for the heck of it. So yeah, there's certain guidelines that must be met in order for you to actually even qualify from the VA department.
Absolutely. And the first and foremost is 210. 210 days is the amount of time you have to wait for seasoning on your VA loan to be able to do anything with the new VA loan. So you could sell your property and buy another property, but in order of doing a refinance, you have to wait for 210 days to do that loan.
From the time that you purchase the house, you're saying?
Yes, from the day of purchase, you have to have at least 210 days and 6 payments made in order to do that. Okay. Second thing we have to think about is the net tangible benefit. On any VA IRRRL, interest rate reduction loan, you have reduction in fees, and we need to make sure that there's a benefit for you. So I'd love to share my screen to give you guys an idea as to what those benefits need to be to make sure that we have that benefit met. So here is the formula for that. We'll pop it on here. Can you guys all see my screen, Jason?
Yep, see it just fine.
All right. So this is basically making sure that there's a benefit that there's being achieved through refinancing. So on a fixed to fixed VA loan, the new rate must be at least 0.5% lower than the existing rate. So for example, if you had a rate of 3.75 and the new rate was 3.25, that would qualify you. Rates are higher than that today, but this is a good example that we wish to get back towards. Second option is the fixed rate to ARM. So if you're going from a fixed rate loan, a 30-year fixed loan, to an adjustable rate mortgage, that difference needs to be 2% lower than the existing rate. So that's really to protect, again, veterans, to make sure that they're not getting into something that could adjust higher to a payment than they currently have. In this example, again, we see that the previous rate on the 30-year fixed was 4.75, and the new rate would be 2.75 or lower. Next one is a fixed rate to an ARM product only, and that is achieved solely through the discount points that are being financed through the loan. What that means basically is no matter what the costs are, we need to make sure that we can finance them through the loan and that there's no cost out of pocket to the consumer. Remember, there are transactional costs involved with a refinance. The way banks can get around that is by offering a higher rate to maybe cover the closing costs. But just be aware, you always want to look at a low cost and a larger cost refinance solution to make sure you see the rate difference and see if it meets your break-even analysis for your goals to refinance. We've talked about that before, Jason, on past shows.
Definitely.
So the other part of this, which is really cool, I like VA IRRRLs, is the VA funding fee. On any VA loan, there is either a VA funding fee or no VA funding fee, which is 3% of the loan balance. That's a big number that the veteran has to pay for if they're not disabled. If they're disabled, it's paid for by the government. Well, on a VA IRRRL, it's 0.5 versus 3 points. So on a VA IRRRL, it makes it a whole lot more affordable to refinance and save money. So I'm very excited that it goes from 3% down to only 0.5% cost. So if your loan was, say, $300,000, you probably paid $9,000 upfront to get that VA loan. Now it's $1,500 to refinance for that VA funding fee.
Right. The difference in you're purchasing the house with a VA loan versus doing a refi with a VA loan to another
Exactly
VA loan,
right. One of the hardest things that's out there, like we're educating people today, right? We're helping consumers understand what they can do, right? Providing tools and resource and education to empower people. Right. Be aware that there are a lot of bad players out there that send things out via mail or via email or via social media that fake like they are operating like they are a government entity. Always make sure you get a couple quotes from local professionals whenever you're doing a refinance to make sure that they are who they represent they are to be. No one should ever represent that they work for the government. They should never use the symbol VA. They should never use anything regarding to any type of letters or stationery trying to represent any type of government agency. The people that can help you are mortgage professionals that have their NMLS number, like Jason and I have. So just make sure you want to be really careful that you're not getting misinformation from someone that might not be looking out for your best interest.
Yeah, that's well said. I mean, we all get these spam letters in the mail that look like they're from a government agency, and then in fact they're really not. And in small print, it'll say this is an advertisement from this company. So I guess that one thing that comes to mind is that how does someone know whether or not they should do a refinance if they have a VA loan? And then also, I'm curious as well is about the turnaround times. How long approximately would it take if someone submits an application through us, for example? How long would it take to do a refi? I'm sure that kind of varies by the area.
Yeah, on these loans, you want to on FHA loans and VA loans, you want to time them to be as close to the end of the month as you can. A lot of loans get paid off differently. Some loans are paid off per diem or per day, and some loans have a 30-day cycle. So we always want to time this to be really good, where you have a payment coming due, but you can close these normally in less than 30 days. The reason why that's important is to know that you can close these fast is because the longer your lock period of a transaction, the more expensive your loan is. So you don't need to have more than the 30-day period of time on a lock. Remember though, you got to wait to that 210-day mark to be able to start and close on a new VA IRRRL loan. So a lot of people are waiting, which we're happy to get you set up and prepared to refinance, but we truly can't lock in rates or get started until that 210-day mark.
Yeah, and
no
that's
one
from
can.
either when they did a refi or their purchase, correct?
Exactly right. And again, we know that you have to have at least a 0.5% difference in interest rate to be able to qualify for that. So you could be doing loans every 210 days if it made sense and if the net tangible benefit was there in your favor. So that's the difference there on that. And I'm sharing a screen now. This is actually something from va.gov. So it's a pamphlet that they hand out. Again, if you look on this document, you can see here in the bottom right-hand corner, I received a letter in the mail about a special refinance program. No one is going to send you a letter from the government. Please work with your local trusted professionals that do veteran loans, that support their community, and are going to do a great job for you. There's no way a transaction should take more than 30 days. So I'd like to share my screen, Jason, again, and show you really what's important. These are all documents by the government. This is vba.va.gov. This is an example of the thing I mentioned earlier. Some lenders may contact you, but there's no one that should be reaching out to you. Veterans are strongly urged to contact lenders considering this product. Again, no one has suggesting that they're the only lender to make the authority to do this. So what I love to do is work with local professionals that are efficient, they're fast, they get things done quickly, and they're there for you to answer questions. So reach out to your favorite local lenders. Jason and I are licensed in certain states, so feel free to reach out to us if you'd like to talk to us about it all. But you should know that these costs are basically standard across the board. The margin that a lender is willing to make or can make on an IRRRL loan, VA IRRRL, is only 1%. That's about normally between half and about 2/3 of a lower margin, which is a good thing for the veteran because they'll be getting the best rate that's available, and they should all be consistent wherever they get that loan.
I see. So the normal margin that lenders bake into the rate or closing costs is around 2%, but for a VA loan, the max is 1%.
Yeah, and that's the way it should be. I'm very happy to know that
Yeah.
veterans do get a benefit there, along with that discounted VA funding fee, and also the fact that they don't need a whole lot of documentation. We don't need to put them through the ringer. We don't need DNA samples. We know they have a primary job focusing on protecting our country. They may be in a foreign country. They may be not readily available to talk with us.
Right.
So we want to make it as easy and convenient as we can for them.
Yeah. So it sounds somewhat similar to a FHA
Streamline. Exactly
yeah,
right.
like
They're
a streamlined process.
They both come from Jenny Mae, and they're both very similar programs. So I love these programs. They're great. Again, look at the net tangible benefits and make sure it's something you're okay with, and all the costs can be rolled into the loan amount. If you look at the options, you can also get rebate, which means a higher interest rate to cover the closing costs. So we always want to look at a cost and lower cost or no cost option if it's available.
Yeah, I think the big picture here is that it's tailored to your needs, right? If you want a no cost refi, or if you want to pay some closing costs in order to have a lower rate, for example. So it all depends on your goals, and it'll be tailored to your needs about what you're looking to do. That's what Jim and I do our best job at. Well, thank you, Jim. And I guess one last question too is that you mentioned that the rate has to be a 0.5 percentage point less than their current rate. So they have a rate right now at 8%, for example, and you want to see that your rate is at least 7.5% or less than that. So how does someone as a consumer find out what is the prevailing going rate today? Do they have to reach out to us? What's your suggestion on that?
Yeah, I would recommend always reaching out to somebody. We'd be happy and honored to be part of that process. It would take us about 5 or 10 minutes to do a total cost analysis for you, to evaluate those differences for you, set up a calendar time that works for you and your schedule. And again, this is not a really complicated equation. It's pretty simple. We do need key pieces of information to be able to get the exact payment you'll have in the future. And there's a really good formula that we use in a spreadsheet that every lender works with to make it be systematic. So there's no one getting less of a benefit. It's the same calculation for everybody.
Yep, as it should be, right?
Absolutely. Yep.
Yeah. Well, wonderful. Jim, thank you for your time, and everyone watching today's video. Thank you so much as well. I'll provide links in the video description below to reach out to us and also to apply for a loan if you guys want to do that as well. So Jim, thank you for providing this expertise regarding how do you do a VA refinance. I really appreciate you, buddy.
Thank you. And thanks to all the veterans again. Thanks for all you do for our country. It's an honor to help them. So thank you.
Absolutely. Awesome. With that said, I hope you guys have an amazing day, and we'll see you in the next video. Thank you so much.